everyone. Thanks so much for joining. Today I give you a tip on how to understand ratios. In finance we use ratios all the time to make sense of businesses, to compare businesses rather than looking at the absolute number of income statements or balance sheet. It's always useful to create some sort of ratios to think about, okay, which company performs better or what was the change over time. If you have no idea and you come across any ratio, there are only two ways of looking at ratios for every single ratio. So let's look at one activity ratio, which is called total asset turnover, which is expressed as revenue over average total assets. And let's say you have never heard this formula, you don't know what this formula means. The first way of looking at formula is you take the denominator input and the numerator's output. So this would be your input, and this is your output, which means you put average total assets into the business and you look how much revenue is generated. This is how you can think about it. So here, if we put 75 total assets in and the company generates 100, then our total asset turnover is 1.3. And again, how do you know whether the number should be higher or lower? Again, if you put 75 in, but the company is able to generate 200, then it's 2.6. And then you know, okay, the company has performed more efficient. So here you know a higher number is better. Yeah, so think about input, output. One way to look at. Another way of looking at, especially when you look not at the asset side, but when you deal with liabilities, is use the numerator in terms of what is available and use the denominator what needs to be covered. So this one is available resources, and the denominator needs to be covered. So here, if we look at one of the liquidity ratios, the cash ratio, it's cash plus short-term marketable securities over current liabilities, and you have no idea how to interpret, then you know, okay, I have a liability, I need to pay something, something needs to be covered, and what are my resources to cover my current liabilities? My current resources are cash and short-term securities. And then again, you know that a higher number means I have more resources available to cover my liabilities. Yeah, another way of looking at it, but it gives you a good indication of how to look at those ratios. Again, if we would use the first approach to see, okay, we put current liabilities in and we have as an output cash and short-term marketable securities, yes, mathematically wouldn't be wrong, but it doesn't give you much insight. So here, better look at, okay, these are my resources, and because here we are on the liability side, this is something, an obligation I need to settle. Look at this way, whereas when you have some assets, then you can think about, okay, this is my input, and those assets, because these assets are owned by the company, are used to generate something. Yeah. One minor point again, if you use income statement numbers, such as revenue with balance sheet numbers, we usually take a simple average, which means if your balance sheet end of 23 is 50 total assets, and then 1 year later is 100, then our average total assets we would use potentially 75, which is 50 plus 100 divided by 2, and then we would use the revenue figure. Revenue is over a period of time, no problem. We don't have the problem here because these are all balance sheet items. So here, for sure, we use the same balance sheet to create those ratios. Yeah, I hope you found this useful. Thank you so much for joining. Talk to you later. Bye.